FutureSpeak, November 9th, day one post-election. Well, I don't have to tell you, this has been one amazing 24-hour period. We have seen some of the biggest moves in the stock market, we've ever seen. And you know, I've been around for over 4 decades. Really, some amazing movement and an amazing election. S&P indexes, we saw the futures move down over 100 points yesterday and then moved to plus 30 today. Dow down 100 points and up over 300. 1,100 point range in the Dow. Bonds, they were up 2 points in a flight to safety and then crashed 5 points on the day. The dollar, moved down big early on, but then came back and actually moved up on the day. Gold, of course, did the opposite. Big up move in a flight to safety as everybody was scared, and then moves back down and gives up all of its gains. How do we figure all this out? Well, first of all, there was a massive change of allocations as far as how investors looked at the market, where they wanted to have their money. Of course, this is all about Donald Trump as president and what his policies will be versus the policies that we've seen in the past, these past 8 years, and even further back than that, as we've had a Federal Reserve that's been in charge, and we've had a President Obama who has looked at things very differently than Donald Trump will. So we had the first reaction, shock and fear, and bonds go up, golds go up, and stocks go down in a big way, and then all of a sudden they rethink it. It was interesting that the market was already rebounding some when President-elect Trump came up to the microphone and started to talk about the fact that he wanted to bring people together now. It was a very gracious speech, very unlike him or anything we've heard before. And the markets really started to act differently. They started to come back, and the shorts actually started to panic. We saw some pretty big upside move overnight as that was going on. He was talking about rebuilding the infrastructure. Of course, that started this whole idea about the shift of allocations as, the heavy industry type companies, of course, they're going to be in demand. Mining companies, the companies that supply the materials for what President Trump will then want to do. That really brought heavy demand in for those companies. And, they weigh heavily in the Dow Jones Industrial Average. So the Dow came back pretty heavily quickly when people started to figure out. Of course, there's downside to everything, and we're looking at the potential for trade wars. People looked past that yesterday as we saw the market, move up so strongly, but that means trouble for multinational companies. And we saw the tech group really suffer. I mean, Apple had a hard time getting back to plus on the day because they're a huge multinational. IBM, the same thing. We've been really bearish on IBM. So there was a huge mix of what was going on. Of course, because Obamacare is going to be history, the drug and healthcare category, that got a big rally. And all of this buying in stocks that we saw lifted those indexes really tremendously. Now, again, what we're trying to do here, what I do is look at all these charts, right? And I spend all this time. And, this video is later today than normal because I was waiting so long to see what was going on and had so much to do to update these charts. So that's the reason you're getting them so late today. Of course, people that are watching this tomorrow have no idea about that. But our focus is always on support, resistance, putting in the right things on the charts and all that. But in the case like this, and always, but especially today, I really want to understand what's making these moves happen, because that's going to carry forward in here as we start to look at these markets as far as the broader picture goes, to really understand about these big moves that went on. So I started to talk about the bond market before I said that, And we saw the bond market move up 2 points in a flight to safety and then move down 5 points. Down on the day, we saw 10-year interest rates go from 170, which was an extreme low last night, all the way up to 210, which is a really, big recovery high for interest rates. So they're, looking past the potential for deflation, which is what I was really thinking about when I did the show last Friday. That is deflation in the markets based on the huge adjustment to a President Donald Trump. They're looking past that. And what they're really looking at, of course, is that, how did Donald Trump do his business? He took on massive amount of debt. He's considered to be a debt king. So all of this, talk about, ending all of these, $20 trillion in debt we have right now, you're not going to see that very soon from Donald Trump because of the way he's going to spend money. He's already talking about $1 trillion in infrastructure. So that got the bond market scared. And add to that the fact that Donald Trump will disempower the Fed. Oh, I hope that's going to happen. You know how anti-Fed I am. All of that is bad news for what we already saw was a bond market that was extremely weak. So those bond patterns followed our patterns just absolutely tremendously. Some stuff followed really well. The stock market now we're going to have some trouble with because it's really gotten skewed based on this election. So I'm going to show you in just a little bit. We're going to have to wait a little time for that dust to settle. So, this big upside move that we've seen in the stock market does that mean that the correction that we had is over? Well, it might. And I'll show you why I think that's a possibility. And we'll know that by looking at some of the shorter term patterns, and I'll show you that too. There's lots of questions out there still, right? Does this big debt matter? Is this just an anomaly with the reaction to the big decline and it coming back, meaning that the shorts scrambled and everybody moved their positions too quickly? We're going to find that out. But in the meantime, let's do what we normally do and look at 23 different futures contracts as we get a sense for what really happened to these patterns that we look at. Are there big changes, or are things, in some things, as I'm going to show you, pretty much the same as they've been? We're going to start out like we always do in the energies. We'll look at foreign exchange, the metals, the treasuries, the stock index futures. Then we'll look at the grains, coffee, and the cotton market as we get into the foods and softs. Lots to look at here, and strap yourself in. Here we go, and here is light crude. Remember that we always look at the left side of the chart on this 2-chart grid as our weekly patterns, and we have a 10-year weekly up here, and on the right side of the chart we have our daily pattern, and we have a 2-year daily chart. And so usually we have them out that far because that helps us properly align the cycle patterns. So right now I'm going to blow up the light crude chart. And I'd like to blow it up sometimes, but there you go. You can see it a lot bigger there. And here you can see that it didn't do a lot this week, right? The energies hardly changed over all of this. They had some moves overnight that really aren't well represented on here, but you could see still in the pattern. We expected light crude to be in this corrective mode in here for about another month or more, and that still looks like it's the case. So you can see that the light crude pattern holding up, no real changes in there. So here is the shorter term pattern. Now we had some notes in here based on what we thought about a Hillary Clinton win and it getting way up over here. Well, the overnight move was bigger than that, really. So it got closer up to that resistance zone, but then it came down pretty quickly. The pattern that we're looking at right in here is the rising phase. That's this one right there, and we're kind of looking for it to get into this minor resistance zone right around the 46 number, 46.30. It's not very much more, and then roll over and continue that correction that we're in. These dotted lines that you can see here, that's these bigger pattern right there. In fact, I'll blow it out a little bit so you can get a look at what these look like. And there you can see that pattern is that big cycle. And now we're kind of early in this rising phase right in here, so we're kind of expecting to get a little more on the upside in oil. And if you see these smaller patterns right in here, so we're gonna, if we use that to help trace this out, we'll look for a little more rally, a little pull back in here, a little more rally, and then starting to get in a little more trouble out over there. So probably just some zigzag right now as we look at the light crude market. And then eventually we believe continuing that correction that I'm showing you on the left side there of that on the weekly chart. /RB is the next one we're going to look at. This is gasoline. Here's the weekly chart. This one following the pattern really nicely. Now that blip that you see up there is when we had the pipeline explosion. And then it really stayed in the pattern. So often, remember this tail right in here when we look at some of these other charts, is that when there are anomalies like that, we kind of ignore them in the cycle rhythms. And you can see it paid to do that in here as we're in this last, let's say, 3 or 4 weeks of a declining phase. So still looking at that, and you'll be seeing as we're looking at the energies, there is still the time on the downside. Here's your shorter term pattern in here, and it's gotten into this minor support zone, or short-term support zone there, and hitting that 61.8% on the downside. There's a lot of time left in here, so we kind of think it's going to go for the 78% level right there. That gets you down to 128.50. And a nice look at where the support takes you down to. So again, we're looking at the rhythms of the cycles. That is the flow of money in and out. And when you get higher bottoms, like you see right over here, it's bullish. And then when you get lower bottoms, like you've got going on here, it's bearish. So we're in a bearish mode here when we look at gasoline. /HO, we'll take a look at that one in here. And this is, whoop, what happened to that chart? There it is. All right. So this, you can see it's in this corrective mode. It's gotten into the support zone. And the shorter term cycle is probably bottoming in there. So you see this bigger cycle right here. You can look at this pattern right there and then this pattern here. So that makes it up, breaks it up into two pieces. It looks like right about here is where that bottoming is. So maybe it'll have a week or 2 or 3 of a pop in there and then come down again. You can see most of the energies patterns are suggestive of the fact that the declining phases are not over yet, and we're likely to see more of that. So like I just said on the weekly, we're likely to get a bounce. If you look here on the daily, we're in the same pattern in here in heating oil. So we're going to look for, see this 89-day moving average coming right to the bottom of that lower, of that minor resistance, which is moving lower. That would then get you up, to around 149-ish, 150. And it's still got room on the upside, right? But we think it can, very unlikely that it'll move up through there and hold it and then move down again. So that's a look at heating oil, and another one that looks like it doesn't have very good short-term prospects, that's for sure. Next one we're going to look at is natural gas, NG. And this one is probably NG, no good, as you can see there is problems right in here. So it broke down in here, it gave us this yellow corrective zone. You can follow the patterns right in here as they rallied and sold off. I mean, really perfect cycle action. This rally back right in here didn't last long, so we think it's this, like that, and in this declining mode already, we have this synchronized cycles that look like they go out into the beginning of the year. So this is about 5 or 6 weeks of downside. Also, it's gotten down to this support zone right over here. You see that? That's this cycle low. And that is bad news because it's got all this time in here if it follows that pattern still. So we still see lower prices in natural gas. Take a look here as we look at this pattern and the way that it sets up right now, and we've had this up here for the last week or longer, where there's a nesting in here and it looks like, well, we could get a rally and then probably roll over from some of these resistance levels and then move down again. So we said that there was still pretty good amount of time when you look. I'm back at the weekly over here. So all of this time right in here, that's likely to be made up with this rally phase that you see here, and then rolling over for another decline all the way out here into January. So if I look at like this pattern right over here, this one ends in early part of December. This one ends in the middle of December, and then this big dominant one here ends right around January 12th. So you can see that all of these three patterns in here are going to make up a lot of zigzag with likely a downward motion overall. So we would be selling rallies when we look at natural gas. That's a look at the energy sector, and as we look at that, we can see that it's not so good, right? I mean, it didn't really get any lift today where, a lot of things did. And that says a lot about, OPEC producing nations not able to really get anything really going as far as the freeze goes, and the glut likely to continue out there. What President Donald Trump would mean to this sector is yet to be seen, because remember, he has said he is very, very anti-trade. That would be, beneficial to our U.S. energy companies. Also, he is much less interested in alternative energies and more interested in freeing up our fossil fuels here in the United States and coal industry back again also. So all of that would, you would think, favor our U.S. energy companies. In the meantime, the overall energy situation in the whole world still looks very much like a glut. So I think we're seeing that here in this when we look at these patterns. So now we're going to switch over and we are going to look at foreign exchange. We're going to look at the dollar, the euro, British pound, Japanese yen, the Aussie, and the Canadian. So the movement in the dollar was really interesting yesterday. As we saw the election news come out, the dollar got hammered. Now, when I did my show last Friday, I talked about the fact that I thought that a Trump election, that if he won, that what that was deflationary. Now, the markets aren't so much reacting to that right now, but I did tweet out saying that when I saw the dollar was down, that was wrong, and that the dollar was likely to move back up. And we actually did see that their reaction was I thought, wrong. Now, where we are right now is just finishing up a corrective period, and then likely that the dollar will have a rough time of it going forward, and that's likely some months out yet. But we had this big rebound in the dollar, and you can see this range that we've had this week as the dollar last night, got sold down on the Trump news, and then during the day came all the way back, all the way up to here. So this is a weekly bar, but the whole weekly bar is overnight yesterday. So here you can see, as we look at that, the big sell-off on the daily pattern right here, as it got this decline and left this tail. We're going to call that an anomaly, as it's rising up now in this zone right over here. We do think that it's going to correct some more. So I wanted to show you this. This comes out into late November right there, so that you could see this pattern right over here, which is suggestive of this rolling over, coming down for another several weeks, and then getting another rally over here. We believe this is going to be a choppy period for the dollar right in here, and then these take over on the downside as we get into next year, and we think it will be a severe dollar move onto the downside after that. So we're looking for some weeks of chop in here in the dollar, and then eventually getting hit on the downside. Here's that short-term chart again, and we think if the dollar picks up its head a little bit more right now, we think it'll then roll over again for some correction. Choppy period, we would say, in the dollar. So now we're going to look at the euro /6E, and these things just had some just incredible moves, right? Look at what happened on this weekly range that we have in here. Now remember, we had this as a red zone, assuming that we were going to get a decline in here for another few weeks. It exploded overnight, of course, on that news as the dollar got hit, but then it gave it up. So again, this is funny because my Donald Trump level was down at this support. My Hillary Clinton level was up here, and it hit both of them last night. So go figure, right? But this was the important 78.6%, and then it just completely failed and is moving down again. So like I showed you in the weekly pattern, it's still moving down, and in the daily pattern, it's really still moving down. So if we want to talk about the inverse correlation, this is at a support area. This is the time frame I thought that the euro would stop moving down. We'd get another rally and then move down again. So I think that, I just talked about the dollar pulling back for the short term. I think we're going to get one more rally in the euro in the short term. So that would be a bounce in this red zone, and then down again is what we're really looking for. Weekly on the left, the daily on the right. So again, if I'm expecting the dollar to be in this choppy period in here, I'm expecting the same thing for the euro. /6B, the British pound. And here is the big red zone that we're in. We think any rally in here is a fake, and that it will again get down under the 120 level. A lot of analysts looking for 115 in the British pound. Here's the pattern we were looking at. We thought it was bottoming and going to get a rally. That was this rally right in here. It's now looking like it's going to roll over. We would look for a little rollover, a test back up here, and then starting to come down again. So another one of these looks at a currency that looks like it's just going to be also in a choppy zone. Sideways chop, that's what we're looking for. The next thing we'll look at is the Japanese yen /6J, and this pattern in here, take a look at the weekly, we were looking for a bottom forming in here. Now, note that this week is lower than this week. We had seen this low here as the potential. We actually think that this is just extending this declining period in here. It would be an awful sign if this was the whole rally in here and then it rolled over for all of this declining period. That's not likely when you've had this triangular type shape right in here. And we think that the decline that we've had here this week or this day is an anomaly. So how would this set up for a bottom? Well, this has about another, 6 or 8 trading sessions in here before it's likely to turn up. You could see the patterns in here. There's the rally and the sell-off, the cycle rhythms that you see on the bottom, and the rally and getting beneath this low says there's more time to go on the downside. We're going to, even though we're bullish on the Japanese yen, we're going to wait this 6 or 8 day period and let it tell us that it's making the bottom that we expect in here. So we're not going to step up and buy it because of this short-term breakdown. We're going to wait for a good setup in here. That's what we always want to do, is get our most advantageous setup. So this is that big yellow corrective zone that we've seen in here in the Japanese yen. We believed it was coming to an end. Now we believe that, well, it's extended out by a little bit, and we don't really think that that's meaningful yet. If we start to get some rallies that fail and then start to extend out lower lows, then we're going to believe it's in a lot of trouble. Right now, we just think it's extending out. Because remember, we think the dollar is in trouble later on, and that would definitely favor the yen. So right now, we're just going to let this dust settle and wait for a favorable entry period there. /6A, the Aussie. This one had also a big range. Of course, it's going to follow gold a lot because it's so tied to mining. The rising phase that we're in right in here, notice all these high waves. That's those candlesticks. and the one you have right there at the same level, that is not exactly a good sign. And if Trump's policies favor U.S. mining companies, over Australian ones, right? Well, maybe it's not so good. So we're going to be watching to see if this is able to continue on the upside. And here you can see these the pattern in here. Now what we're looking at is this important low right at this level. So it's come back down to the minor support level, and what we would consider a buy level right in here. So it's got about 3 or 5 trading sessions left in this declining phase, and assuming it holds above that level right over there, then that confirms to us that this is a good buy zone. So we'll be looking at that as a potential long side trade in here. And it's got to hold that level in there to maintain the bullish upward pattern that we see looking at the weekly pattern. So there's an upward rising channel that's in that upward pattern, and we can use the channel indicator right in here to draw it, something like that, right? So there's your upward channel, and we really like to see it stay above that zone right over there, and then continue that upward channel and give us a good sense that that long-term trade, that long position trade that we're looking at, is the correct one. /6C is the next one we're going to look at. That is the Canadian dollar. This is the weekly pattern. We've had it as negative, and you can see it just keeps moving towards the downside. So this low right over here was this key cycle low, selling off here, rallying here. Once it broke under that level, it sets it in a negative trend all the way out to this point. And that takes you to the end of the year. It sure looks like to the end of the year before this downward correction has the possibility of coming to an end. Take a look here at the daily chart, and you can see that it's already broken down, really, it looks like, in here. So we would not be a buyer in here. Look at the way it failed from that short-term resistance right there, and we think that any uptick in there is likely to bring more selling in the Canadian dollar. That's a look at foreign exchange. And overall, like I said, in the dollar and the euro, the British pound, it looks like we're going to be in a choppy period in there as the dollar gives up some of this, gets another rally going again, and then starts to form a top in there for some bigger declines, we think, out into the winter time, beginning of next year. So right now, we're just going to be trading some of the shorter term moves there in foreign exchange. So now we're going to look at the metals. We had this huge up move in gold, 60 something dollars on the upside, and then it gave all of it up. When, again, like we talked about the dollar, when we saw that big move in gold, we really thought that there's a deflationary aspect to President Donald Trump, and we thought that the dollar would come back and gold would reverse the whole thing, and that's what we saw. Gold is really has really tried to get a bounce going in here that was significant, and that move up that we saw yesterday, we really think was an anomaly. We saw it in the other precious metals also, and we will be examining how these anomalies end up to be just like little temporary blips in the market and end up going into their original trends that they were in, unless there's some very significant structural change to what's going on. So take a look here as we look at the gold market. We're going to start out, as we usually do, looking at the weekly chart. Now, this big upside move, like we say, is we believe was kind of an anomaly, and then it kind of, look at this week as it gave it up, and the upside tick that we saw up here, well, that was just a panic high up there. You can't really give it credit for being real, and it, this area that it really failed from, the intermediate 50 or 618, pretty significant area in there. This level right down over here is the key, 1244. If it gets under that level, it's going to be in a lot of trouble. Now, the question is, you see this little decline right in here on that out of phase cycle pattern. That's what we think is right in here. So you see that pulling down there. Then we expect to see another rally in there. And then after that, these things take over right here, and you can get some pretty big declines. We actually think that we're in a pretty sizable corrective period right in here. You can see that right there. And that once we get out of this green zone, it's going to be some pretty decent declines out into late winter, like March. Is where this times out to. So we think that any rallies that we get in here are going to be fake. And just like we saw the panic rally yesterday fail, we expect to see other rallies continue to fail. So here is the pattern we're in the short term. I've got so much analysis in here that you really have to work hard to see it. This was, now here again, here was my Hillary Clinton level, and here's my Donald Trump level, and both of them basically hit overnight. So no value, right? I mean, this stuff just, sometimes the moves are so big that, and so fast, that what good was even that type of analysis? Well, that's how I feel about that right now. So we're in this downtrend right in here on the short term, right in there. That looks like it's got, well, just a few days to go. And then we think we get another rally in here, and then it starts to roll over again like that. Here you could see the dotted line is the GDX right there. This is the gold, the bigger pattern right there. And this dotted line is silver, which we think probably did make a bottom already. I'll show you that in a second. And, getting ready to have some sort of an up move in there. So we're going to be looking for just a little more sideways chop in here, and then another move to the upside that we think will fail. We're looking at the area of around 1310 to 1320 as this upside area that we think it will fail from, and that's just a blip, right, when we see the way these recent moves have been in there. Now let's take a look at the silver chart right here, and that's not going to work. I have to go back out to gold, and then we'll come back to silver to get this aligned properly. Sorry about that. Here we go. So here's the silver weekly chart. Now it made its bottom right on time. So you see the declining mode in here, and that's this right in here, and then the rising phase here, and then that's this one you see here. So it gets up into this intermediate resistance zone. It then starts to fail. It's a little bit early to look for a failure in here. As a matter of fact, we would expect to get still several more weeks of upside attempt in here before it does begin to roll over again. These patterns, just like gold, are suggestive of February or March, where this corrective period ends. So there could be some trouble out there after this short-term rally period we're expecting. So here's the silver pattern that we were looking for in here, and I think you're going to see that it's already made that low. So here's the lows we were looking at right there. It didn't quite get to the minor support, and then we think it's turned up already. So for short-term traders, we think that silver is buyable right now, and we're likely to see it move up to the top of this resistance, maybe this 89-day moving average. That 89-day moving average has been really a monster. You could see the supports right in here, the support right over here, and then when it broke down through it, it was very meaningful. So you could see it got to the underside of it or close in the upside panic, and we think that area of around $19 to $19.20 is where we're going to get the uptick to, and then it's likely to begin to fail from that level. So minor support level right over here around 1795 down to about 1770. We don't think it's going to get below that, and we think we're going to see a rally in there first, and before we get into any corrective phases, which would be way out over here. That's the weekly chart again. So right for the short term now, as you could see the way we have it drawn in here with this cycle projection pointing to the upside, that's basically what we believe, though 1920 is probably the top of that move. /PL, That's the next one we're going to look at. And here you could see we're in the same thing in this rising period. This is a more negative pattern than we have in gold or silver because it's gotten below that level. We're in this rising phase, so we had this decline. You can see that there. Note this decline, note this decline, note this decline. And then you could see the rallies as they came in each of these rally phases. Beautiful, right? Here's the rally phase. But this is a negative pattern right in here. It's suggestive of the fact that we will fail from this level. 34-week moving average, 38.2% intermediate fib. That says to me that it's going to be a short up in the 1030 area. That was really our upside target in here. And then I think we're going to see some more downside. So everything I just showed you, gold, silver, and platinum, all points to this trouble out here, right? Out to March. And we're going to look for some sizable declines out there. And that would be some completion, we think, of some major correction that has started really about 3 months ago in these metals market. Now, copper, this is a whole different story. And when you look at copper, you got to really wonder, did copper somehow know about the Donald Trump election? Copper made its bottom, or the cycles lined up perfectly, to have this monstrous move on the upside into the fib confluence. You can see how it blasted up above where our first projection was, right over there, as we've had the big upside move, and it gave no ground. It closed right on its high. And this is all about Donald Trump's a program to build infrastructure, right? To use all of these materials and cause it causes huge demand. And we've had these 3 monstrous up weeks. The period of extreme downside risk that we saw in here brought that decline right there. This we believed was going to be the rally phase. We actually put alongside trade in down over there. And that was just outstanding location, incredible. So this is the short-term pattern that we see in here. Now it's had this monstrous move, closing way up there at the highs. We think there's going to be a pullback. Now the pullback, this high is I think this is going to need to be updated. Let's do that right now, because I think that the move got beyond the point where we updated it with a late move. So why don't we just do that now so you can see the proper levels. Here's the Fibonacci retracement tools. We're going to go from this low right over here to this high right over here, and look at how much it raised these Fibonacci numbers. There's your 23%. That would be the level that we'd expect a correction, and this is your minor support zone right in here between the 38 and the 50% right there. So we're just kind of updating this because this big late move in here we didn't quite have it updated for. So you can see that our correction, which we had in the right place, was suggestive of the fact that we think it's going to pull back to the 23.6% and then move up again. Whenever you get this kind of big up move with just a little time to correct, that's called a right-hand translation. You usually correct down to the minor 23%, maybe the 38.2, but it's unlikely, and then begin to move up again. So we won't buy it here, but we certainly would buy it somewhere down over here in about a week if it does correct. But as I'm drawing this in, this is still moving up in here. So these supports are rising as we see copper still moving to the upside. So amazing action in there as copper is just absolutely screaming and being bought on every tick. On the weekly here, the next Fibonacci resistance is up at around 251, and then over here at around 256. And man, we don't even know if it's going to hold based on this massive buying that is going on in there. So that's a look at copper, and they call it Dr. Copper, and somehow copper knows. And when you look at this copper move, you can kind of understand what the investors' thoughts are about the Treasury market and potentially about the stock market, because copper is saying that there is going to be a huge fiscal stimulus by Donald Trump coming in, building all that infrastructure, and of course taking on all that debt. His hope is that economic growth will bring in so much money that it'll overwhelm the debt, which is not likely. But in the meantime, that's what investors think. So we're seeing this big move up in copper, and of course it's negatively affecting the bond market in a giant way. Now, we've made no secret of the fact that we were really bearish in bonds. And when we saw that blip up in the bond market, well, we thought that would hold a little bit because of the panic of the Donald Trump win. But cycles win out in this case, or cycle analysis, as the bond market continues down in a giant way. So, of course, we're looking at the repeating cyclical patterns in here that's this one right in here is what we're looking at, that have this repeating 12, 13, 14 week patterns. And so here's your 15-week low, here's your 12-week low, your 13-week low. That's these patterns right in here. And we're in this declining mode, which is now in its 8th week. So it's followed the pattern perfectly. It's come down to an intermediate 61.8%, getting a little bit of a bounce from there. If the stock market pulls back some, we're expecting a little more bounce in here, but we think it will be a screaming sale and get more on the downside. Interest rates popped 2.1%, incredible. So here we see this 8-bar low. We're expecting 12, 13, 14. So every rally for the next month or month and a half is a sale, right? Because, well, probabilities of the cyclical pattern suggest that. So here's the pattern that we're looking at now. Okay, so this is the Donald Trump win that I had marked off in there, and you could see it almost got perfectly up to the level. And then, this resistance just takes a hold, and this whole concept of the stimulus from Donald Trump and the loss of control by the Fed, that brings in this huge break. It gets way under this 100% fib extension. And now you have to go to the weekly supports to see where the supports are in there. The short-term pattern, I'll go back to the weekly in a second. The short-term pattern suggests that another day or two at the most, or it's over with already. And then you get a rally phase in here. That would be a screaming sell right in this level here. Right now, based on what we're seeing, it's at around 29.05 to 29.20 in that area, and then we think that is a screaming short side setup when it gets there. When we look at the this pattern in here, this 100% extension down here is at 27.07. This level right over here, the major 78.6, is at 26.19. Those are very reasonable targets for the 10-year in here, as we have this 4, 5, 6 weeks potentially to go. Now we'll switch this over to the 30-year. You'll see a very similar story. As we got this pop up in here and then moving down big on the downside. Again, 8th week in here, there's a 78.6% at 153.20. We believe it's highly likely we're going to see a number that low over this next month if it doesn't get down to this major cycle support at 147.5. Another 10 points on the downside. We moved high to low, we moved 7 yesterday, right? So why can't that happen? It's in this major downtrend. It's been in it, we've spotted it, and we think there's more to it. So here we look at the bond pattern, and you can see the same thing, right? Where we have this failure from this resistance level, and then coming down to what we think is a bottoming right in here for a bounce. We have not yet put in the resistance level in here, and I will do that so that we can have some sense. I wanted to make sure where I knew this low was in here before putting in the next resistance or the sell area in the next bounce. So you can see this big pattern right in here. That's the one. That's the big pattern that has about 4 weeks, 5 weeks or so more to go. This one bottoms right around the same time. So this rally in here is likely going to be a high quality short side sale when that rally comes, and then we think it will be pretty much a high probability to catch another good downside trade. Why don't I just put in that a real quick look at what that short-term resistance would be. We'll just duplicate that and grab it right in here, and then put it right in here. So that would be right now, even though this is moving lower, that would be our upside sell zone up from about 159.30 to 160.30. So it's about a 2 to 3 point bounce in here, and then that would be what we would consider our minor resistance area, and then likely to see some big downside movement in there. So I just filled that in there so that you could see it, and that I'd make sure that I remember to adjust it for our chart subscribers this week. That's a look at the bond market, and plainly interest rates surging, bond market collapsing literally under the weight of stimulus, Federal Reserve losing its power. I mean, that's really the two major things in there. So now let's look at the stock market. Now, the pattern that we were looking at was suggestive of the fact that we thought it had another couple of weeks on the downside. We really have to wonder with the extent of the bounce that we saw in there, which the total correction overnight, though we believe it was an anomaly, was like 10% off of its highs, right? The low that we were looking for is likely to be in place already. Now, we could get some test of that, but I got to tell you, this type of movement that we're seeing, and the buying that's coming in copper, and the buying that's coming in a lot of these very, very depressed areas, is likely to keep coming. And that being said, our anticipation of some further correction that we thought would then be followed by another rally, it's sure looking like that rally started already. If you look at the NASDAQ, and I'll show you, that's the only one that isn't quite proving it yet. But overall, there's pretty good signs. I'm going to show you some other charts that I'm looking at in here also, including the market condition indicator, that I think will give us some heads up also going forward. Hasn't quite done it yet. So let's take a look here as we look at the 3 weekly charts of the indexes that I normally show you: SPX, NDX, and RUT. So here's the pattern that we were looking at in the S&P 500. Our anticipation was that, well, if Donald Trump won, we'd get into that zone. Well, we did that, didn't we? Even though the line isn't there because it was overnight, and this is the S&P 500, and I don't have this set on. I only have it set on the regular pit traded time. I don't have it in extended hours, so it's missing the line that would be like right in here, right? And that, well, actually, that wouldn't be the case. It's on the ES, actually. So it got down a similar level to that area, hits the support zone, and look at this bar right in here, this weekly bar. Now, what's the chances that it's going to avoid getting through this resistance level right here? It's so close already. It gets up to the 78.6%. This was our projection, and that's this line right in here, and that brought all this selling. It was perfect, but now we've got a skew on our hands, and the skew is because of the election and because of the massive buying coming in specific important groups. So we get up to that level, yeah, it could fail. It could go straight down in here and complete this pattern. That's not high odds. The high odds are that maybe you get a little bit of pullback here, or correction, but that this downward bar is over already, and that we're going to be moving up, and maybe in a significant way. I'm not making that bull market claim yet. This has to prove itself to me in a couple of different ways. But right now, the signs are certainly there that the correction is plainly over. So now when I look at this pattern in here of the daily pattern, so you can see I left all the projections in here. So you see this dotted line in here? That took us down for another 2 weeks. That's what I was looking for on the weekly. But look at what went on in here. It moved over everything, and now it's gotten up to that minus 78.6%. This level right over here, if it gets above there, which is around 2177, that's 14 points away, right? It's going to break out. I mean, it's going to say it's all over with. That would be my first sign, getting above that level. That's that high right over there. What is the real number? I just made up 2177. Let's put in the real number right over here and bring it across so that you can see what level we're talking about. And that is 2180 approximately, okay? So that's what looks like would be the important cycle breakout. That's about 17 points away. Up here at the minus 78.6%. Yeah, it could happen, right? It could happen where this rolls over, see this cycle pushing down right in here, and gives you a sizable decline. It's not likely. Here's your minus 23.6, down at around 2150. This is 2137. This is 2127. So these are the important levels in here. And my guess is you get some pullback in here, and then you take off, because that's the way these patterns are looking. So this is the first signs that, well, that intermediate low that we were looking for happened already. Man, I don't like saying it because I didn't predict it, but that's what's there. And we've got to look at the charts and say, what do we learn from what happened, and how do we capitalize on what's next? And right now, this is looking like a bullish scenario. So I just jumped over and showed you the daily, which I said I wasn't going to do, but here's the NASDAQ. We'll just pop back and forth to weekly and daily. Here's the same scenario in here. Now, the NASDAQ didn't get up as high. It came down, into this intermediate support zone. This was another couple of weeks away before that low was due. You can see the way we have it drawn in here. This one didn't do quite as well because of the internationals that are built into the tech sector. So that gave it some little poorer performance in here. But you can see in here that this area of downward movement in here, it's got a little better chance of giving this up and having some bigger declines. But again, what it looks like to me, because the distance from here to here is so big, that you're going to get into this support area, it's going to use up this time, and then it's going to take off again. So this big distance in here is what's getting me some sense that the big decline that we saw as a corrective period, which came, is gone. And we're going to watch closely for that. Let's switch over to the Russell RUT. And man, the Russell was really acting extraordinarily weak. So we expected, again, that this important low right over here, you can see our timing spikes, was likely to come in another couple of weeks. Well, that's not so bad if it came right there. And you could see this big bar right there. That's what happens when you turn up in these cycles, like here, and like over here. So, this looks like this massive asset reallocation out of bonds into stocks is started. And that could get you to new highs in all of these indexes if we're right about that in what we're seeing. Take a look here in the NASDAQ right here. You can see the pattern as we had it drawn. We wanted you to see that because we were wrong. And this pattern in here, this rally right there, that's likely to give you some pullbacks. And then after that, it could be in an upward stair-step movement. So important level here, the short-term 78.6%. We're going to watch for that. It's already gotten above that cycle area right there. That is your first sign that things are good. right? So it's got to get up through here right there, and then the next thing we'll be looking for is that new high area. So question is, how much pullback? Here's your area right there, 2116 on the 23%. 2104 is the top of the minor support zone right there. So we'll have to see how these pullbacks look and how it acts getting into that level. So you can see the stock market did something spectacular in here, and I think that the rally that we saw is not an anomaly, and that the rising phase that we expected to start in a couple of weeks started already. Let's take a look at some other information that will help us with this as we look at the MCI. I mean, grab it in here. I've got so many charts all over these screens that I want you to see what this market condition indicator looks like. So I'm moving that over into the screen for you to see, and there's some important things going on right now. So again, when I put this up, I like to give you a little lesson on how the market condition indicator works. It's a multiple time frame indicator which weights the weekly the heaviest. It comes all the way to intraday. And because it weights the longer time periods the best, it's the best reflection of our cycle analysis that we have. So we had all of this negative stuff going on right here. That you look in the S&P 500, and you look at the Russell, you see that, and the NASDAQ and the Dow, and these were very negative readings. Now, you see the yellow line right in here as it gets up into what we call the swing zone. Now, you've had a giant rally, and you could see that the recovery in the MCI is only getting into the swing zone here in the NASDAQ. It's getting into it right here in the Russell. It is way down under here in the S&P 500. And the Dow Jones, which is weighted by these industrials that are so going to be, a benefit of Trump's fiscal policy, exploding up through it right there. So you can see how the different indexes work. Now, the NASDAQ is your first sign that this is a real rally. If these indexes, if the MCI gets up through these swing zones right in here, it's going to tell me that the internals have improved so much that it's confirming that a major low is in place, the major corrective low. Now, one more chart that I want to show you that I think I've only shown this one or two other times is a 2-hour chart that I often look at in the S&P 500 that has had really fantastic repeating patterns, and you can see that right in here. So you can see the way that these are made up is of a big pattern right in here. Note the way the cycle patterns are working perfectly, and each of those made up of 3 smaller patterns that you can see right in here. And if I just follow the 3 small patterns, you can see them perfectly right there. 1, 2, 3, 1, 2, and 3, and 1, and 2, and it's not there anymore. This got above this level, and it says that my fear of the market skewing because of the election is being proven right in here. So in other words, this pattern may still pull down, both of these nested patterns, but it's likely to give you a few days of gyrations and correction, and then getting into the next rising phase in there and a potential breakout. So this is another reason why I'm cautious about saying anything negative about the stock market in here when it looks like we've got this massive reallocation going on that favors the stock market in a big way. We could be in an upside panic, and that looks like it potentially started today. We're going to know that in a few days. We're going to know that by these levels. But I got to tell you, I got to call it like I see it. And that's what I'm seeing right now are the signs that that corrective process has ended. And we've moved into some serious buying phase right now. And you saw that today. 1,100 point swing off of its low in the Dow, and incredible 130 point swing in the S&P 500 to the upside. You got to listen to the markets. That's what we're trying to do. All right, a few more charts that we're going to look at in here quickly as we look at the grains, coffee, and cotton. /ZC, we're going to look at the weekly chart. And we'll take a look here as we saw a lot of weakness come in to the grain markets. And we actually think that we're getting near a bottom right in here in the corn market. You could see that pattern right there. No sign of a bottom yet, but we think it's going to come pretty soon and then be moving up. So we'll be in this rising phase that you could see right in here that was really scheduled to begin on November 9th. You could see that. And here we are in November 9th. /ZW. We'll look at this one, and you can see here that this one's got maybe another week or two to go before that pattern looks correct to us. You can see the bigger patterns that are in here also. So this one, let me just see if I can get this over to, sorry about that, to your weekly. There you go. So there's the bigger pattern in there. I had that on the wrong chart. And so that looks like a couple of weeks to go also. And then moving up, let me just go back to the corn chart because I had that on the wrong chart also. There we go. So this one has a couple of more weeks to go also. I thought it was more than 1 week. It's a couple of more weeks to go right there, and then be moving up just like we just saw in the wheat pattern. /ZW. Let me get this. Having a little trouble typing ZW because I'm going too quickly. There we go. A couple of more weeks in here also, and then turn up. We look at the soybean pattern. It's a little bit different, and as it's in this rising phase and it's been pulling back, this one actually we've been seeing more buying possibilities than we've been seeing in any of the other grains. And here we have one coming again. We think a couple of days in here, you see it's in this minor support and then getting ready to turn up. We think you can buy it here under the 985 number and then get a trade up here to about 1040. So that's our kind of an upward projection. It's about a 50 cent trade would be a nice trade in the soybean market. As we look at the weekly and the daily in that one. /KC. This one looks like it's beginning to top to us, and people that get our rankings and setups know that we put something out in there today. You can see this big long-legged doji that's forming in there. We think that means that this pattern right in here is turning over. Then you'd get a rally and then you'd get a sell-off, right? So the way that would look is you come down into December, beginning of December, you get a rally in here, and then you get a bigger sell-off in here. That's how the cycles help us project that. So it's coming to that time right now. Look at these upside projections in here as it hits this pardon me, fib confluence and gives you this engulfing and turns over. We think that is a big sign that it had gotten overdone on the upside. As a matter of fact, it got pretty overbought on our option bias readings, and this really is a pretty good sign that it's likely to start to trade down into the support zone in here. That's between, we'll call it 159 and about 162 down there. It got under the minor support already, so I don't give that a lot of credence. We think it's going to give that up and then move to the downside. Last one we're going to look at is cotton. /CT, and you can see here that it's been in this upward mode, but this is super deficient. Why do I say that? Now note the rising phases in here. So you see the rising phase there, got a good rally, right? You got the rising phase in here, right? It only rallied for a couple of weeks and then essentially went into this long decline. So when it breaks under this level, it was negative. Here's a super bullish pattern, right? Because it rallies that whole time and gives you that decline for 3 weeks. And then we're in this rising phase right in here, and you're not getting any upward lift. So we think that at some point it's going to start to break to the downside. The question is when. Right now it might have a little more time to move up in there, and then after that we think it could roll over. Here's the daily pattern in here. So you can see that it's following this upward pattern, right? If it gets under this level, that's trouble. Right now it's holding this upward trend and it's getting into this rising zone. That's why I said to you on the weekly pattern, I think it's got one more pop in there. But then after that, there's probably risk. So we'll see how far it gets up in here. And then if it rolls over and gets under these levels, if that's the pattern that we get, it's going to be a top, and it's going to prove that this upward rising phase into this resistance zone was all it had, and that it would be likely to getting into a bigger downside correction. There was a lot in there, a lot of explaining, a lot of trying to understand the changes that have occurred, structural changes in the markets, in investor attitudes, where they want their money to be, what's real in the moves and what's not. I think that you might have some questions, and I wouldn't blame you if you did. The trickiest part of this to me was, really getting a sense for how the stock market's early bottom might have come, how the bond market is interpreting all of this, and why it went to such a big free fall as it did, and what it means to these other markets. So you've got any input on that? Love to hear it. I always want to get your feedback. That is FutureSpeak for today, and I will see you in the next segment.